What's going on, guys? My name is Chuck Butler, and you are tuning in to the Weekly Friday Recap, a segment where I go over what I traded in the stock market for the past week, and I also go over how well or poorly I performed. And don't forget to like and subscribe only if you found value in whatever I was saying by the end of this video. And let's go ahead and get right into it. But before we do that, I hope you guys all had a wonderful Thanksgiving if you celebrate that. And I hope you had a safe Black Friday, because Lord knows I wasn't going to be all up in that mess for a deal that's going to be there the next day. True story. My parents last year, or not last year, but a couple years before that, when I was still living at the house, they were shopping for us and they decided to go to Black Friday, for Christmas. And some of the deals weren't there, so they went ahead and left. They came back the next day, and the same deals were there with just less people. And I was like, what? So, you may want to think about that the next Black Friday you decide to attend. But anyway, let's jump right back into it. As you can see, I am down just like 1.4% for the week, with a simple mistake being impatient. And I was only able to make one day trade this week because for some reason, I decided to, no, not me, but for some reason my day trades, all of them, no, not even all of them, only one of them came back on Friday, because I did day trade 2 times on Friday last week, I believe, or near close to the end of the week. So it was my fault, and they should have came back on Thursday, but, Thanksgiving was there, so that didn't count as a business day. So only one of them came back on Friday. So, boo-hoo, let's go ahead and just move on to the next week, get ready for it. So let me go ahead and show you what I did wrong. Boom, bam. And if you're wondering, this is the Thinkorswim desktop application. All right, then, so as you can see right here, this is the ticker symbol I traded, ticker symbol UGAZ, UGAS. It is a leveraged 3 times bullish ETF for gas. And if you've been paying attention to natural gas for the past month, it has been very volatile, which is why I like to trade it. I like volatile tickers. I like things that move. So as you can see, I identified a support and a resistance at 164. That's the support. Let me go ahead and draw. It was actually trading in a horizontal pattern for a while. Boom, bam. It was actually trading in a horizontal pattern for a while between 164 and 170. And what I was waiting for, I could have played the bottom from 164 to 170. That would have been 3%. That was my bad. That's something that I could have played. But what I was waiting for was for that break above 170, because since this was my only day trade for the week, I wanted to make it count. So what I was going to do is wait for the break above 170, because that's where I identified resistance. And from 170, I was going to go ahead and try to scalp it and sell at 180 for about 5.8%. But obviously that did not go as planned. I shouldn't have, when tickers are consolidating, when tickers, especially ETFs, are consolidating like this and making a horizontal pattern, you either have 2 things you should do. You should wait to figure out which direction one is going to go if you're playing the inverses, or you should just trade the horizontal pattern. I was waiting for the break of 170, and about the 3rd time it decided to come back up, that's when I decided to get in. But that was my mistake. I did not wait for a clean break and pull back to the break point, which was my fault. Let's go ahead and look at DGAS. As you can see here is its inverse, DGAS, the bearish natural gas ETF. As you can see, it was trading in the horizontal pattern, and I had my support drawn at around 260, around the 260, 270 area, and my resistance drawn around the mainly the 277 area, but the main breaking point for me was going to be 280, which is where I was going to get in if you guys decided to go the other way. So let's go ahead and look at its future, which is what I use to trade UGAS and DGAS /NG. Here's the horizontal pattern. If UGAS is going up, that means natural gas. That means natural gas is going up, and if DGAS is going down, then that means /NG is going down, vice versa. So as you can see, I was waiting for that clean, clear-cut break above 456, which is what I was anticipating playing, but as you can see, it did not clear that, and I set my stop loss at around not the 450 area. I set my stop loss around the support at around the 164 area, and I got filled at about 163.54 here. Let me go ahead and show you the trade. See, 4 shares at 169.50, then the 4 shares stop loss at 163.33. So yeah. So let me go back. I'm down about 1.44% for the week. So yeah, that was the only trade that I made. And look, DGAS did what I expected it to do. Here, let me go ahead and show you the main pattern that I saw with these two tickers. These two tickers, pay attention to the two purple lines. They were trading in a horizontal pattern from the bottoms of 230, right here and right here, to highs of 330, as you can see right here and right here. And DGAS had a minor support at around 270, as you can see from around right here, and right here, which it bounced from today. And UGAS had a minor resistance at 170, which it didn't break. Didn't break. And the main resistance was around 190, and the main support was around 130. And this was another simple trade that it could have gone worse, but it could have gone better as well. What I should have done is, I knew the pattern, I knew what was going on, I was just being impatient. That's all. So with me being impatient, that's what happened. That's what led to my failure. But I did understand the trade. I learned my lesson over and over. This is about the 15th time I learned my lesson of being patient. And yeah, so the trade just didn't work out for me because I wasn't being patient. What I should have done is I should have, like I said, when tickers are consolidating like this, between the horizontal patterns, usually you should wait for the certain direction that they're going to go in, unless you want to trade, in between, all power to you, because in between here, 164 and 169 was about 3.55%, which I should have taken, but I wanted a little bit more because, like I said, it was my only day trade for the week. Oh, and I suggest if you're stuck in the PDT rule like me, I suggest that you use your day trades Monday, Wednesday, and Friday. Reason for is because usually your day trades take 2 business days to come back as soon as you make one. So make one on Monday, it should come back on Tuesday. Wednesday. Then make one on Wednesday, it should come back on Friday. So you're only making obviously 3 day trades in the week, but you're not missing out on all the opportunities like I did this whole week, because I missed out on a lot of good opportunities, and I wasn't going to swing anything because the market is too volatile right now, but I did miss out on a lot of opportunities because I didn't have any day trades. So there's 2 lessons for you right there. Not being patient, which you should be, and understanding the pattern, which you should do before you enter and exit a trade. Oh, and also risk management. This could have gone a lot worse, but I went ahead and set a stop loss at the support, which I identified, and it broke below it, and I got stopped out. Because if I was holding it in hopes for going back up, I would have been down all the way. As you can see, DGAS, it did what I expected it to do, and by the end of the day, it hit the 320 mark. Because what I was planning on doing is just as soon as one of them break, or as soon as one of them broke, I was gonna go ahead and put in my order and set a stop loss about 5 cents below it and just let it run all day. I wasn't just biased on UGAS or DGAS. I was gonna play the one which broke first, and obviously DGAS broke the pattern first, but I was just being impatient, So that's gonna be it for this Friday recap, and I will see you guys on the next Stock Talk Sunday. So check out.